Hello, ladies and gentlemen. This is Thomas Fross here with Fross and Fross Wealth Management with your weekly market and economic update for the week of November the 23rd, 2020. And yes, if you're keeping count, we are only 4.5 weeks from this crazy year being behind us. As always, please make sure you read those disclosures that were attached to the email that sent this video out. Or if you happen to be watching on social media, you can simply go to lplresearch.com, read any of the disclosures that you might find therein. So we had a great week last week as far as COVID-19 vaccine research goes. And the good news from that pushed the Dow Jones up a whopping 12% for the month. With that, it rose above 30,000 for the first time in history. And it looks like we potentially had the best month for the Dow since January of 1987. And it wasn't just the Dow. The S&P 500 and the Russell 2000 also hit new heights. Now, I think the key takeaway from last week's market performance is that investors are doing a precarious balancing act between positive vaccine news and at the same time climbing COVID-19 cases. But see, this is what we've really been looking for, vaccine news, in order for our economy to get going again. Now, think about how different it is when we have an event-driven pullback like we just went through, and when there's a structural problem that causes a pullback. You can illustrate it this way. If you're driving down the road in your car, there's a big difference between your car running out of gas or the engine breaking down and someone, a crossing guard, let's say, standing out in front of our car and holding a stop sign. Now, in both scenarios, our car comes to a stop. But the second one, the latter one, where the crossing guard has a stop, all they need to do is remove the stop sign, step out of the way, and we can take back off. Our car is still in sound shape. That's different than if there was a structural problem with the car, and now it's going to take a while to get the car fixed. And that's similar to what we went through here. The economy was not necessarily sick. It was running on all 8 cylinders, we could say, until COVID-19 hit. And that's like COVID just stood right out in front of the economy with a stop sign. And so fortunately, this is not an event, a structural problem like we went through in 07 through 09 as an example, or maybe the dot-com bubble burst of 2000. And so what the news has really been waiting on, the average investor's been waiting for that stop sign to be removed. And it looks like with this vaccine, promising vaccines, now a number of vaccines that are over 95% effective, then the market is very, very happy about that. Overall, it's our belief here at Fross and Fross Wealth Management that the long-term outlook is positive. However, our dear friend volatility still is going to be showing up in spurts. Now, we've been fielding a lot of calls on Dow 30,000. Is there anything significant about that? Does it really mean anything? Well, it's definitely a good thing, don't get me wrong. It's great, actually. But what's more significant is the factors that led the Dow to 30,000 rather than just some number itself. In terms of the number itself, there's really not much significant. And matter of fact, the Dow hitting 30,000 is really no more significant than when it hit 29,928, or if it hits 30,169 in the big picture. In terms of magnitude, the fact is point moves are not as big of a deal as they used to be. Back in the day, a point move could be a really big deal. But if you think about it today, if there's a 1,000-point swing in the Dow, that represents less than a 3% move. So just for perspective, the Dow's gained 4,400 points in just the last 5 months. In terms of performance, it's definitely positive. However, the number itself isn't that relevant, but the level is a sign of the strength of the stock market right now. At the 30,000 level, the year-to-date return for the Dow is 5%. But if we look back at the last 8 months, the Dow has actually risen 61%. That's almost 12,000 points since the end of March, just March of this year. In terms of history lessons, these milestones are, once again, not consistent signals. Now, looking to the future, there are reasons to really be optimistic, but at the same time realistic. The rise to 30,000 has been boosted by positive vaccine news. Obviously, there will be challenges in the months ahead with cases rising and the markets reacting emotionally as they tend to do. We must remain simultaneously positive and realistic at the same time, because if we get caught up in the emotional frenzy, we're just going to suffer needlessly. Well, we hope that you had a wonderful week last week, and we hope you got to spend it, whether it was virtually or in person, with your loved ones and your close friends. And I must say, from our perspective, we look forward to this craziness being over and being able to see you in person. And as we continue to say, as of this date, we are one day closer to this whole thing being behind us. Have a wonderful week, and we look forward to seeing you soon. Bye now.